Good morning, and thanks so much for tuning in. This is Stocks to Watch, and I'm Alex Matthew. Happy Monday to you. I hope that the start of this week is a little less chaotic than what last week was for the stock markets. But without further ado, let me introduce you to my guest today. Avinash Gorakshar is joining me this morning. Avinash, of course, is with Profit Mart. Thanks so much for joining me, Avinash. The first stock out of the three that we're speaking about today is interesting because we haven't spoken about it for a while, and we're speaking about it with a slightly positive outlook this time. I'm talking about Berger Paints. It was a tough start to the year, very clearly, but the company's CEO Abhijit Roy has been quoted as saying a few things that, well, while they may not be looked at as a clear outlook, at least they can be looked at as something of a hint of what to expect. He has said that Q2 sales will be better than Q1 and Q3 will be better than Q2. He has also said that upcountry markets will have or have been better than metro cities. So perhaps a little bit of an expectation as to how the geographical mix is going to be. And he's also saying very clearly that the company is not scaling back on capital expenditure plans. How do you take that commentary, and what's your view on Berger Paints?
Hi, good morning, Alex. I think definitely commentary from Berger Paints is extremely positive, and I think it is no surprise that the quarter two will be significantly better than quarter one. Quarter one obviously was impacted by the lockdown in April and May, and I think to a large extent, now unlocking has happened. Normalcy has started coming back to normalcy level, so we could see a better quarter two number. But I think the would like to know how the third quarter pans out, because this time the festival season actually comes in October and November. So a large part of the markets are expecting that possibly in the third quarter, Alex, the numbers could be significantly better. Paints, as a discretionary item, we see a lot of demand, just ahead of the festival season. So this could possibly definitely perk up volume, and on the profitability side, the good part is that crude prices still continue to remain soft. So margin expansion is definitely going to be possible. The key number would obviously be volume growth. This stock has corrected significantly, and I think the paint sector has been a very popular sector from the investment point of view. So here I think from a longer term perspective, any decline can be used as an opportunity to decline, could be used to buy. But overall I would believe that yes, long term prospects are good, and hopefully we could see a better third quarter. And obviously if the COVID-19 virus situation eases, then I think normalcy could kick back in a very normal way to pre-COVID levels, possibly after December. So net I think these statements are positive.
Avinash, very quickly to wrap up this particular stock, which would you pick in the paints space? Would you pick Berger or would you go with Asian?
I think Asian Paints definitely has a larger market share and a much better kind of a geographical pan-India, coverage. But I think in terms of valuations, I would believe that Berger Paints could give you a better risk reward. Asian Paints is definitely good as a portfolio choice, but Berger Paints I think would equally give a better kind of a risk reward, from the current price level. So I would believe that investors who want to take a longer term view on the paint sector should not ignore Berger, and I think I would prefer Berger, and then to a large extent Asian Paints, because these two companies primarily control a decent market share in the domestic paint market.
Avinash, speaking of a stock that has, been a rank outperformer in the context of whatever we've seen in 2020, we're talking about Dr. Reddy's now. And the latest update, I do not know. I'm hoping that you'll be able to tell me the significance of this. They've launched Tecfidera tablets in the US market. And Tecfidera, by the way, is used for the treatment of multiple sclerosis in adults. I was looking at a few very broad industry reports, and the market for multiple sclerosis drugs is not insignificant. So it is quite significant. So how big is this development, and would you say that it has somewhat gotten priced in to the extent that the stock has rallied 77% in the year-to-date period?
Alex, as far as Dr. Reddy's is concerned, I think the Federa, development is extremely positive, and I think although the market has discounted this partly, what kind of revenue and profit comes from this new drug is yet, got to be reflected in the financial numbers. So I think you would probably have to wait for. And I think the overall market opportunity for this drug is a huge opportunity. So hopefully, I would not be surprised that we could see a little bit of consolidation in the Dr. Reddy stock as of now. Markets would obviously look at the kind of management commentary and the kind of opportunity the company is able to penetrate into this market. So I think net, I think it is a stock which should be, purchased on every decline. You are right that, the stock has seen a substantial rise in the recent past. So obviously, at these levels, maybe the risk reward may not turn out to be very attractive. But from a longer term point of view, I would believe that any decline in the markets, which gives you an opportunity to buy the stock at lower levels, would definitely be an entry point. So I'm pretty positive that FY22 could be a very strong year, and possibly the second half of FY21, you could see the reflection of this new drug in the company's top line and profits.
Speaking about the extended pharmaceutical space now, Avinash, we're talking about IOL chemicals last. And this is a stock that has gone up 300% or more than 300% in the year to date period. It's now trailing from or rather trading from what I can see at over 10 PE trailing basis. And, the interesting part is that a lot of people are saying that there's still room to grow. Uh, there are a few updates, Avinash, but I haven't seen the transcript. There have been some statements that were made in the AGM by the management. I believe that you're more familiar with that. What is your rating on the stock, and do you think that somebody can still consider buying it? It's still considered a small cap stock.
Yeah, I think Alex, right. This is one of those stocks which has multiplied, significantly, largely because API prices have significantly increased post the China development factor, and most importantly, this company exports basically ibuprofen, which is a key, input for this material, this drug, which is a very prominent drug in the painkiller space. Our expectation is that the management commentary in the AGM was extremely solid, and we could see possibly numbers getting better. The first quarter was obviously impacted due to the lockdown factor, but I think the second and third quarter could be good. So I think any decline, Alex, could be used as a better opportunity to accumulate the stock. But definitely FY22 could be slightly better. FY21 could see a slight slowdown because of the COVID factor. So net, I think you can definitely look at it as a good long-term opportunity, but only on declines.
Since we have the time, Avinash, I also want to ask you about the broader API space. And I understand that this China factor is playing a big part in some of these counters rallying so significantly. But beyond that, if you were to look at purely the fundamentals and the prospects for growth, which stock would you pick, and which would you say is still attractively valued despite the kind of run that we've seen?
No, I think pure API companies are difficult to find. I think there are smaller players like Moriphan Laboratories which have also done well in terms of numbers. But I think you should have a combination of API and formulation. And in that space, I think it's always better to stick to the large cap names like a Sun Pharma or a Lupin Pharma, typically an Ajanta Pharma. So I think we are clearly going to see more migration to the value addition space, that is formulations as well as APIs, significantly give you that kind of upside, because I think to a large extent most of the API stocks typically which are related to the China factor have more or less appreciated significantly. So I think incremental gains on pure API companies may be a little less. So I think it's better to focus on large cap companies like Sun Pharma, Lupin, which I think definitely offer decent value over the next 12 to 18 months. So I think you should have a mix of pure API as well as frontline formulations and API players which are basically using the APIs for their captive purposes. So I think net, this space is going to see interesting times because we are yet seeing increasing prices for APIs, shortages from China, and definitely yield better numbers for these companies over the next say 12 to 18 months.
Thank you so much for that, Avinash, and for the bonus answers that you gave us. It was a bit of a frantic
Thank you.
Thursday and somewhat better Friday. Let's see how Monday pans out. Do stay tuned. We'll bring you all the updates
Yeah.
right here on Bloomberg Quint.